Have you ever opened a company's financial report and just felt overwhelmed? It can look like a giant wall of numbers, and it's easy to have no idea what it all means. But here's the secret. Inside that report is a story. It's a story about the company's health, its plans, and its future. Today, we're going to crack one open together. We're going to dive into this report from Aarti Pharmalabs and learn how to read the story behind the numbers.
So, let's kick things off with the number everyone always looks for first: profit. In their latest quarter, Aarti Pharmalabs reported a profit of 47.8 crore rupees. Now, just to give you some context, that's up from 40 crore just a few months before. So, right off the bat, things are looking pretty good, right?
You guessed it. Of course not. A single number, even a nice growing profit number, is just one chapter of the book. To really understand if a company is doing well, we have to put on our detective hats. We need to find the clues, connect the dots, and piece together the entire picture.
And this is our roadmap for the investigation. We'll start with that profit number, what they call the bottom line. Then, we'll go back to the beginning to see where the money came from in the first place. That's the revenue. We'll dig into where it all went, take a quick snapshot of the company's foundation, follow the actual cash, and then, at the end, we'll bring it all together to see the big picture.
All right, first stop, the bottom line. You know, the easiest way to think about it is like a lemonade stand. The bottom line is simply the money you have left in your pocket after you've paid for all the lemons, the sugar, and the cups. It's the final result, what's left over after all the costs of doing business are subtracted.
And this analogy just hits the nail on the head. Knowing a team won a game is one thing, but knowing how they won. Was it an amazing offense, a rock-solid defense, a last-second shot? That's the real story. It's exactly the same with a company. The profit is the final score. But to get what's really going on, we have to see how they got there.
So, let's head to the top of the financial statement. Before you can have any profit, you absolutely have to have revenue. This is called the top line, and it's the total amount of money a company brings in from selling its stuff. It's the starting point for everything else.
So, for Aarti Pharmalabs, in their latest quarter, they brought in 377.3 crore rupees from selling their products. That's a little bit up from 374.3 crore in the previous period we're looking at. So they're seeing some steady growth, which is good. This is the total pot of money they started with before a single bill got paid. Okay, so here's a little puzzle for you. If the company started with over 377 crore, but they only ended with about 48 crore in profit, where in the world did the other 329 crore go? Well, it's time to look at our next clue, the expenses. Understanding where a company spends its money is absolutely critical.
Now this chart gives us a massive clue about how this company works. Look at that biggest slice of the pie, cost of materials. It's their biggest expense by a long shot. This tells us they're a manufacturer. It means their profitability is super sensitive to the price of their raw materials. If those prices go up, it could really squeeze their profits.
And this is where the story gets even more interesting. When we compare these two periods, look, the cost of their materials actually went down. That's fantastic news for their profit. But then, look at this other line. Employee costs went up. Now, that can mean a few things. Maybe they're hiring more people for future growth, or maybe they're just paying their current team more. Either way, it shows they're investing in their people.
Okay, so far we've been looking at the flow of money over a few months. But now, let's pause and take a snapshot in time. This is where the balance sheet comes in. You can think of it like a financial selfie. It shows us everything a company owns and everything it owes at one specific moment.
The whole idea of the balance sheet is built on one simple but really powerful equation. Assets equals liabilities plus equity. Let's break that down. Think about your own house. The house itself is an asset. The mortgage you owed the bank is a liability. And the difference, the part you actually own, is your equity. It's the exact same idea for a giant company.
And as you can see, Aarti Pharmalabs has a pretty healthy balance sheet. The value of what they own is way more than what they owe, which is a great sign. Another way to look at it is their debt-to-equity ratio. In their case, for every 1 rupee from investors, they've only borrowed about 47 paise. That's a very comfortable level of debt.
All right, we're heading into what might be the most important part of this whole thing, even though a lot of people skip it. You see, profit is great, but it's an accounting number. It's not the same thing as actual cash in the bank. You can be profitable on paper and still go out of business because you ran out of cash. That's why we have to look at the cash flow statement. It's like checking your bank account. It shows you where money actually came from and where it actually went.
To keep it simple, cash flow is broken down into 3 main activities. First, you have cash from operations. That's the money coming in from the main business. Then there's cash from investing,
which is money spent on big things like new factories. And finally, cash from financing, which is money from banks or investors.
And this right here, this is a fantastic sign. Over the last 6 months, the company's core business generated a positive cash flow of over 106 crore rupees. In fact, that's even more than the accounting profit they reported. This is a huge indicator of a healthy, efficient business. But whoa, wait a minute. A big negative number. At first glance, you might think, oh, that's bad. But hold on. In this case, this is actually a sign that the company is investing heavily in its future. This number shows they're spending serious money on things like new factories and equipment, stuff that's going to help them grow down the line.
So you might be wondering, where did they get all the money for that big investment? Well, some of it came from the cash their business generated. And the rest? It came from financing activities, which brought in almost 96 crore. This tells us the company took on some new loans to help pay for its big expansion plans.
Okay, team, we've gathered all the clues. We've looked at profit, revenue, costs, assets, liabilities, and the all-important cash flow. Now it's time for the big reveal, the aha moment. What's the real story that all these numbers are telling us?
This one chart tells a really powerful story. Take a look at the revenue. It's been pretty stable, right? Not a ton of growth there. But now, look at the profit. It's shooting up. This is a sign that the company is getting way more efficient at turning every rupee of sales into actual profit. They're becoming a lean, mean, profit-making machine.
So what's the bottom line on our story? Well, Aarti Pharmalabs looks like a company that's really firing on all cylinders. They're making more profit even without huge sales growth because they're managing their costs well. And they're taking that cash, plus some smart borrowing, and plowing it right back into the business to fuel future growth. It's a classic story of strength and investment.
And now, the ball is in your court. You're the detective now. Based on everything we've uncovered, this story of heavy investment and rising efficiency, what's the next clue you'd be looking for? What's the next chapter you'd expect to see in their next report? The story is still being written, and now you know how to read it.